Hello and welcome back to the second part of this trading video. I have a link in the description box below for the first part if you haven't watched it yet. So I left by showing you how professional traders enter positions and what they do immediately after a position has been entered. They take a partial profit as soon as they are in profit, and then the next step they take is what we'll discuss now. So in my case, I already took a partial profit right here. I made $3.30, and at this point, I am up about $9 roughly, give or take. So now comes the next step, which is what to do next. Well, what traders do next, and of course they have a tool that will actually do that for them, is they then take stop loss and move it to their entry position, which is right here. So now at this point in time, I am automatically in another profit, a dollar, but more importantly, this stop loss now becomes a trailing stop. That means that as price continues to move in my chosen direction, which in this case is a sell position, price continues to decline. The trailing stop will follow price and will automatically lock in new levels of profit. The same goes if I were to be in a buy position. Once I set the trailing stop after I took partial profit, and I then set the trailing stop to the break even price, and as price continues to trace upward, the trailing stop will follow price in an upward direction and lock in profit this way. So this accomplishes two things. Number one, the if price were to retrace, it'll eventually trigger the stop loss, but I have a profit. Wherever the stop loss is, I have a profit. The second thing that happens is that if price doesn't retrace but continues to go in my chosen direction, it will eventually trigger my take profit level, and I have a profit. So no matter what, at this point on, this is now absolutely a profitable trade. This is how you need to trade. And that's also the reason why you need to use stop loss that becomes a trailing stop loss. That's why you need to have a stop loss that is pretty tight, meaning not too close to your entry point that it will, after just a small retracement, kick you out, but enough so that your losses are not over the top, losing your shirt. This is how you do it. So now, at this point in time, I have the opportunity to quote unquote walk away from my trade. Now I have the opportunity to be relaxed because no matter what happens, if there is a sudden, completely unexpected news that throws this in a complete opposite direction, it doesn't matter. I am in profits. The only difference now is how big will my profit be? And at this point in time, I leave it at that. I'm done. So what I do now and what professional traders do next is that they're now starting to analyze markets all over again of a different asset or different assets. In my case, it's always Forex. I have, as I mentioned in earlier videos, I do have stocks, but those are investments. I don't use those for trading. And in fact, the investments I have are all based on the profits I make from trading, which we'll get into much later on. But the fact of the matter is, this is how it's done. This is how you trade. And you can learn this. Just open up a demo account and practice, and you can get this. And once you do, you will never look back. You will let go of these videos that claim to turn $50 in $3,000 in 72 hours, or $100 in $100,000 in what did he say? 3 months, I believe the video claims. Let go of that. Let go. Do it the smart way. Do it the scientific way, proven way, And while you will still sustain losses here and there, that's just the nature of the beast, you will be profitable, you will be successful. Okay, that concludes part two of the videos for today, and I'll see you tomorrow in yet another video. Take care and God bless.